Let's get more on the impact from Wells Fargo's Chris Harvey, who managed to stick with us. Thank you, Chris, for sticking around. I mean, when you hear things like the auto tariffs will be made permanent, does that change your view of how things play out?
It doesn't change our view, right? So, again, you still have to have some defensiveness, some lower volatility. But one thing we've been talking about in the office is a lot of credit card data has still been very good. The consumer has been strong. And what we've been saying is we're not sure it's going to be as predictive as it has been in the past because people walk into the showroom and say, whoa, how'd that happen? And you can say a lot about the U.S. consumer. When the U.S. consumer sees value, they will buy. When they don't see value, they will step away. And I think that's about to happen.
We've seen a pretty decent move back higher in yields. What, if anything, does what you just heard over the last 20 minutes mean for interest rates?
Not too much. I think interest rates actually do grind down. I'm not in inflation. I think inflation will continue to grind down. I think one of the things that the administration does have right, if they can get oil lower, then inflation will go lower. And oil has been going lower for the most part, right? So we're not too worried about inflation at this point in time. We don't think rates are going to trend up much higher. We think they're more in a downward spiral, but a pretty tight range.
In terms of earnings season, which we are going to be in shortly, what do you expect? I mean, it's basically a free pass for CEOs to sandbag or to say there's a lot of uncertainty, et cetera. So are you saying in the second half of the year there will be upside to all those forecasts?
Yep. Second half of the year, I think, is up a fair amount of upside. But you're right. Earnings season this time around, the thing that we've been seeing from earnings season, the reports, the reaction, not good. And I think that's going to continue. And you're right. There's no reason to go out on a limb at this point in time. And so you may actually just want to sandbag things a little bit, and that could cause a negative reaction during earnings season, which is something we haven't seen in a while.
Is that a buying opportunity in your view?
Eventually.
But you're not willing to say that yet.
Not yet.
You don't want to go out on a limb.
Chris, what are you seeing and what are you thinking just about rotation out of the obvious ones, the Mag 7s, in a world where there's been underperformance? You're talking about a barbell approach. I didn't really hear a high-growth part of your barbell.
Well, the high-growth part of the barbell is communication. But talking about rotation, one of the things, Mel, before we got cut off, what you said is, hey, what surprised us? We were looking for regime change. Regime change was predicated on some sort of resolution between Russia and Ukraine. That, while we haven't had that just yet, there's a lot of optimism around there. And that has sparked that regime change. It's rest of the world versus U.S. It's value over growth. It's low vol over momentum. And so you're seeing people say, we have other opportunities than the Mag 7. The other thing that they're saying is, hey, the growth opportunities, the trends, the absolute numbers may not be as strong, but the trends are much better over in Europe. They're better in value. They're better in the rest of the world. And that's where they're putting their money.